Canadians are boycotting American products, avoiding travel to the US, and their prime minister is fighting a brutal trade war with Donald Trump. But here's the shocking twist. Canadian investors just poured a record-breaking $50 billion into US securities at the height of this trade conflict. And now Mark Carney has done something that's sending shockwaves through Canadian politics. He's backing down from his tough guy stance and scrapping most of Canada's counter tariffs. So what's really happening here? And why are Canadians saying one thing but doing something completely different with their money? To understand this paradox, we need to go back to how this trade war started and why it's creating such a contradiction in Canadian behavior. When Trump launched his aggressive tariff campaign in early 2025, Canada found itself in an unprecedented position. Despite being America's second-largest trading partner and one of its closest allies, Canada was suddenly facing punishing tariffs that threatened to devastate its economy. Trump imposed 25% tariffs on Canadian steel and aluminum, hit the auto sector with additional duties, and eventually raised tariffs to 35% on Canadian goods that don't comply with the US-Mexico-Canada agreement. The message was clear. America was willing to weaponize trade against even its closest neighbors. Canada's response was swift and defiant. Under Mark Carney's leadership, the country imposed its own 25% counter tariffs on $30 billion worth of U.S. imports, targeting everything from oranges and alcohol to clothing and motorcycles. Carney campaigned on putting Canada's elbows up against American aggression. He promised to match Trump tariff for tariff and negotiate from a position of strength. Canadian consumers responded with patriotic fervor, boycotting American products, canceling trips to the U.S., and embracing Buy Canadian campaigns. The political rhetoric was all about standing up to the bully next door. But something fascinating was happening beneath the surface that completely contradicted this narrative. While Canadians were publicly rejecting American products, their investment portfolios were doing the exact opposite. According to data from the National Bank of Canada Financial Markets, Canadian investors poured an eye-popping $50 billion into U.S. securities from February to May 2025, the most since at least 1990. This wasn't just a small uptick, it was described as an unprecedented rate of investment. The breakdown is even more revealing. Canadians bought $35 billion worth of U.S. stocks during this period, essentially betting on American corporate success while their government was locked in economic combat with Washington. They also purchased $14 billion in U.S. Treasury bonds, literally helping to finance the deficit of the same government that was threatening their economic livelihood. As Warren Lovely from National Bank Financial put it, in other words, Canadians have been helping to finance the deficit of the government that's repeatedly threatened our economic livelihood. This creates a stunning contradiction. On one hand, Canadians are emotionally rejecting America through boycotts and political rhetoric. On the other hand, they're economically embracing America through massive investment flows. The explanation for this paradox reveals something profound about how modern economics really works versus how politics wants us to think it works. Experts say this buying frenzy represents Canadians being fundamentally pragmatic about their financial future. As Moshe Lander, an economics professor at Concordia University, explained, the U.S. boycott is an emotional thing, not an economic thing. A lot of Canadians have realized that there's a limit to how far they're prepared to voice their objections. When it comes to their retirement savings and investment portfolios, Canadians are making cold, calculated decisions based on where they think they can make the most money. And that's still the unit. Ed states, this investment surge reflects several hard realities. First, the U.S. stock market remains the world's largest and most liquid, offering opportunities that simply don't exist elsewhere. Second, many Canadian pension funds and investment managers have mandates that require diversification into U.S. assets. Third, despite the trade war rhetoric, most sophisticated investors understand that the U.S. and Canadian economies remain deeply integrated and interdependent. But there's something else at work here, something that helps explain why Mark Carney just made one of the most controversial decisions of his political career. Carney uses a hockey analogy to explain Canada's strategy shift, comparing trade negotiations to a hockey game. While it might be appropriate to drop the gloves early in the game, taking penalties late in the game when you need to be strategic isn't the best approach.
What we're doing, again, is matching what the U.S. is doing. That's fair. It's fair to match what they've done. And it puts us in a better position to focus in on exactly those sectors, work for it. So sometimes, to go back to the earlier question, you drop the gloves in the first period. When you're late in the game, dropping the gloves and taking the extra penalty might not be the best thing to do.
Indeed, we've been trying to diversify trade since the last time the Americans did this to us, which was 1971 when President Nixon imposed an across-the-board 10% tariff. We panicked. We spent 50 years investing significant resources to try and diversify from the U.S. Yet there are hard business reasons why business continues to choose the U.S. market. The Americans are signaling that the days of free and easy access to the U.S. market are over.
It's a little bit performative. There is potential, but I don't see significant potential. Look, if we want to move trade numbers, our largest export by value is oil. So if we could build more pipelines and get oil to Europe, you would see those trade numbers shift drastically. But look, we've been trying to diversify trade since the last time the Americans did this to us, which was 1971, President Nixon, across the board, 10% tariff. Some nuance there, but largely across the board, 10% tariff. We woke up one morning to find this. Monday morning in August, we woke up to discover that Sunday night the president had done this. We panicked. We spent 50 years investing significant resources to try and diversify from the U.S. And we've had subsequent shocks. Look at softwood lumber. It seems every year they're getting hit with something else. Yet we continue to go to the U.S. There are hard business reasons why business continues to choose the U.S. market and will continue to choose. So diversification will help, I think, in the margins. But the reality is we're next door to the U.S. Business will continue to choose the U.S. market. We've had trade agreements. We've had trade assistance help. We've been trying this for 50 years, and we're still in the U.S. Even when we had a similar shock 50 years ago, we still wind up exporting more to the U.S.
Former Conservative Industry Minister James Moore provides crucial economic context about the trade relationship between Canada and the U.S. He explains that less than 1% of America's daily GDP depends on trade with Canada, while about 1/5 of Canada's daily GDP output depends on access to U.S. markets. This stark asymmetry demonstrates why a prolonged trade war would be unsustainable for Canada. Moore argues that while retaliatory tariffs made a point initially, continuing them would ultimately punish Canadian consumers while merely annoying the American president.
Less than 1% of Canada's daily GDP, less than 1% of the American daily GDP output is dependent on trade access into Canada. About 1/5 of Canada's daily GDP output is dependent on access to the United States. So the sustainability of us in a full-blown permanent trade war with the United States, it would hurt America, it would hurt Canadians as well. And then you layer on top of it the go-forward dynamic of you're going to have reciprocal tariffs on American goods coming into Canada. Well, now you're punishing Canadian consumers and you're annoying the American president. So I think we made our point. There's a place for countervailing and reciprocal tariffs in certain industries that are being treated grossly unfairly by the administration: steel, aluminum, certain food products, and those are going to be continued going forward. But the idea of getting more and more every day toward.
Last week, after a phone call with Trump, Carney announced a dramatic shift. Canada removes most retaliatory tariffs on U.S. goods.
In on exactly those sectors, work for it. So sometimes, to go back to the earlier question, you drop the gloves in the first period. When you're late in the game, dropping the gloves and taking the extra penalty might not be the best thing to do.
As trade tensions continue with the U.S., what could this mean for negotiations between the two countries? James Moore is a former Conservative Industry Minister, and he joins me now. Hey, James, thanks for coming on.
Pleasure's mine.
How would you characterize what the Prime Minister has done here with the retaliatory tariffs? Is it a form of capitulation, a betrayal, or do you see it as, an act of goodwill to try and get a deal done?
I think it's appropriate for the moment, but there's a piece of his analogy that is unknown. He says that there are times in a hockey game where you do want to go into the corners, elbows up, and maybe drop the gloves, and there's times to be more disciplined and finesse things. But at the end of the analogy that you just played right there, is he said, when you're heading towards the end of a game and it's very close, maybe you don't want to take a penalty. So the question is, are we towards the end of the game? How close are we towards the end of the game? That's the question that we don't know. And the media availability that you're clipping right now next to me here, the Prime Minister said that one of the things that President Trump said is that they are negotiations, and that the tariff consideration and the trade issue of Kuzma and the renegotiation that was expected for calendar 26 will be either moved forward or sort of sistered with the tariff conversation. Well, that's
Prime Minister Mark Carney explains this as matching what the U.S. is doing and putting Canada in a better negotiating position. The timing is crucial. Canada had been one of the few countries to aggressively punch back against U.S. tariffs, but the economic reality was becoming impossible to ignore. A Canadian source reveals there's urgency to secure a trade deal with the U.S., though no guarantees exist for success in the coming weeks.
Source tells me that there is a sense of urgency right now, that the Canadian side sees a window to try and land a trade deal with the U.S., but the source also says that there are no guarantees that it will happen in the next few weeks. Canada-U.S. Trade Minister Dominic LeBlanc is here right now in Washington. He met with Donald Trump's Secretary of Commerce, Howard Lutnick, this morning and posted a photo online calling it a productive meeting. LeBlanc's office says it lasted about 90 minutes, and it's all part of Canada's efforts to try and get the Trump administration to drop or at least lower a series of tariffs hitting Canadian sectors hard. Here's what the Prime Minister said today.
Aluminum, steel, autos, copper. They happen to have a specific on copper, and then, of course, lumber, softwood lumber, which has been an issue. So those are the areas where immediately we are focused on improving the outcomes. In order to do that, we will have to look at other areas where we can have win-win cooperation, other areas.
Today's meeting here in Washington comes after the Prime Minister announced last week that he would drop some retaliatory tariffs on the U.S. because he says he was given assurance by Donald Trump over the phone that it would intensify talks.
And Ashley, you've learned more details about how this meeting came about. What can you tell us?
JP, the Canadian source tells me that after the Prime Minister's announcement that he would drop some of those countermeasures, that Mark Carney and Donald Trump exchanged texts and that they agreed LeBlanc would come here to Washington for these talks. The source also said there was a recognition from the American side that Canada had taken.
Trade Minister Dominic LeBlanc's 90-minute productive meeting with Commerce Secretary Howard Lutnick is part of Canada's effort to get the Trump administration to drop or lower tariffs affecting Canadian sectors. The Prime Minister outlined focus areas including aluminum, steel, autos, copper, and softwood lumber, emphasizing the need for win-win cooperation. Carney's decision came after Trump raised tariffs on non-USMCA compliant Canadian goods to 35% on August 1st. Rather than escalating further, Carney chose to de-escalate, arguing that Canada needed to preserve its unique advantage under the trade agreement. He pointed out that 85% of Canada-US trade remains tariff-free, and that Canada still has the lowest average tariff rate among all US trading partners at just 5.6%. But this move has triggered a political firestorm in Canada. Conservative leader Pierre Poilievre accused Carney of putting his elbows down and bending over backwards to appease Trump. His elbows have mysteriously gone missing, Poilievre said, referring to Carney's campaign slogan. Critics argue that Carney broke his biggest election promise and showed weakness just when Canada needed to stand firm. The backlash reveals the tension between political symbolism and economic pragmatism. Union leaders like Lana Payne from Unifor called Carney's decision a mistake, arguing that Canada shouldn't back down unless the U.S. makes reciprocal concessions. They see this as capitulation that will only encourage Trump to demand more. However, business groups largely welcome the news, despite some hesitation. The Canadian Federation of Independent Business called it a step in the right direction that would take the pressure off Canadian small businesses. They understood what the PI political rhetoric often misses, that trade wars ultimately hurt both sides and someone has to be willing to step back from the brink. Moore highlights a significant diplomatic development: President Trump's notably warmer tone toward Prime Minister Carney compared to his previous interactions with Canadian leadership. Trump didn't mock Carney with nicknames like Governor and expressed that he liked working with him. Moore sees this shift from the president's previous belligerent stance to a more respectful dialogue as potentially positive for future negotiations. Though he remains cautiously optimistic about the future, Carney's calculation appears to be based on several factors. First, the investment data shows that Canadians themselves aren't willing to completely decouple from the U.S. economy. Second, Canada's geographic position and economic structure make it impossible to truly isolate from American markets. Third, with the USMCA up for review in 2026, Canada needs to preserve what leverage it has for those crucial negotiations. There's also a broader strategic consideration. While the political rhetoric focuses on standing up to Trump, the economic data suggests that Canada's future prosperity still depends heavily on maintaining access to U.S. markets. The $50 billion investment surge during the trade war proves that even Canadian investors recognize this reality. This situation reveals a fundamental truth about modern trade wars. They're often more about political theater than economic strategy. Politicians on both sides use tariffs to signal toughness to their domestic audiences, but the underlying economic relationships are too complex and profitable to truly sever. The investment flows show that market forces often work against political posturing. Carney's decision also reflects a longer-term strategic shift. Rather than trying to match Trump's unpredictability, Canada is positioning itself as the stable, reliable partner. By backing down from the tariff escalation, Carney is betting that American businesses and investors will eventually recognize the value of having a predictable neighbor to the north. The timing of this de-escalation is particularly significant given Trump's broader trade agenda. The U.S. president has imposed tariffs on dozens of countries, with rates varying from 10% for the UK to 41% for Syria. In this context, Canada's decision to step back from retaliation might actually strengthen its relative position by demonstrating that it's willing to work within the existing trade framework. But the political costs for Carney are real and immediate. His elbows up campaign resonated with Canadians who were frustrated by Trump's bullying tactics. By appearing to back down, Carney risks being seen as weak just when his approval ratings were climbing. The investment data, however, suggests that most Canadians were never really prepared for a full economic divorce from the United States. This paradox, public anger versus private investment, reveals something important about how citizens relate to their government's foreign policy. People want their leaders to stand up for national dignity and sovereignty, but they also want their retirement funds to grow and their economy to prosper. When those two desires conflict, the economic imperative often wins out, even if people won't admit it publicly. The $50 billion investment surge also highlights the limits of economic nationalism in a globalized world. Despite all the rhetoric about buying local and supporting domestic industries, Canadian investors clearly believe that diversification into U.S. markets is essential for their financial security. This suggests that true economic decoupling would require government intervention on a scale that most democratic societies would find unacceptable. Looking ahead, Carney's gamble will be judged on whether it leads to a broader de-escalation of the trade conflict. If Trump responds by lifting some of the remaining tariffs on steel, aluminum, and autos, Carney will be able to claim victory. If Trump sees this as weakness and demands further concessions, Carney's political position could become untenable. The investment data provides some clues about how this might play out. The fact that Canadians continued pouring money into U.S. markets even during the height of the trade war suggests that both sides have too much to lose from a complete breakdown in economic relations. The $50 billion investment surge represents a kind of vote of no confidence in the sustainability of the trade war. This story also reveals how trade wars can create unexpected political dynamics. Trump's aggressive tactics initially helped Carney by giving him a foil to campaign against, but they also created economic pressures that eventually forced Canada to moderate its position. The investment flows suggest that market forces were working against the political rhetoric from the beginning. The broader lesson here is about the complexity of modern international relations. Public opinion, political posturing, and economic interests don't always align, and successful leaders have to navigate between these competing pressures. Carney's decision to scrap most counter tariffs represents a bet that economic pragmatism will ultimately trump political symbolism. For Canadian investors, the message is clear. Despite the political turbulence, they see the U.S.-Canada economic relationship as fundamentally stable and profitable. The $50 billion investment surge during the trade war is perhaps the strongest possible vote of confidence in the long-term resilience of North American economic integration. Whether Carney's strategic retreat proves to be political wisdom or weakness will depend on what happens next. If it leads to a broader trade deal that preserves Canadian access to U.S. markets, while addressing Trump's concerns, it could be seen as masterful diplomacy. If it's just the first step in a series of concessions that leave Canada worse off, it could define Carney's legacy in the worst possible way. But one thing is certain, the investment data shows that Canadians themselves were never really prepared for a complete economic break with the United States, no matter what the political rhetoric suggested.